Hello everyone and welcome back to our special weekend edition where we cover off on the stock, crypto and commodities markets for the week ahead and the key levels that you need to be watching. Last week was a quadruple witching event, a very special time with a huge amount of options expiries, and we saw the markets rally heavily into this. They caused the maximum amount of pain. We'll discuss that a little bit later, but this week will probably show us the true direction of this market, whether it wants to continue that bull rally or whether it wants to come back down and allow traders and investors to get back in. Stay tuned. We've got a great show today. See you soon. All right, welcome back everybody. If you like stocks, cryptos, or commodities, please remember to subscribe and smash that like button. Let's start off with the week performance. You'll notice it's a sea of green, except in some of the favorite sectors. Funny that. Everyone goes to energy about 2 weeks ago. It crashes, gets destroyed, and everybody suddenly forgets about technology. Technology was the sector of the week. Big money going into that. Microsoft, Tesla, Nvidia, Amazon, you pick which one you want to look at. They were all doing very well, but we do have some key ones that I think you can still be watching in the markets, and we'll explain why. Let's talk about the Friday session. This was where things got a little strange. Nasdaq, S&P 500 and IWM all did really well, and they actually closed, especially the S&P 500, at the maximum pain point. Now, a lot of people in our Discord room, join the link if you'd like to in the description down below, they were correctly predicting that maximum pain would be reached. I'm not a big one on always going for max pain, but basically what that means is that if Wall Street wanted to make the maximum amount of money out of all options expiring mostly worthless, they would push it towards that direction, and that's where they did it. Did you know that this was one of the first quadruple witching events that was actually positive in the last 2 years? Yeah, it was pretty surprising. I thought 440 might act as some resistance. As soon as the day traders got it through though, you saw it come back down to that level, act as great support, and buyers just commenced. So it's been an okay trade this week for day traders, for investors, DCAing and buying particular stocks, and it's been pretty bad for the bears. But maybe this is the week that the bears get some back control in the markets. We'll take a look at that later. Of course, we'll be covering off on commodities, cryptos, indices, and stocks today, and of course our macro thoughts. This is what happened on Friday from the sector analysis. Yeah, it was pretty much the same thing that we've seen recently. Mostly all of these most hated sectors were doing best. If you have a look at this chart here, what was doing best on Friday? Surprise, surprise, some of the ones that were lagging or underperforming the rest of the market. And it really shows you the tale of two markets at the moment. We've still got energy out in the lead, XME for this year, both up 30%. And many people are now saying, oh, I've missed out on the lows, I've missed out. Well, they're still down quite significantly in terms of these major, very popular markets. So we've discussed this since really January, this idea of selling the rumor and buying the news. Funny how about a day or two before the FOMC, what happens? The market bottoms and then it starts rallying, and it rallies into the rate hike itself. Now, this is a mixture of a few things. Maximum fear in the markets, huge amounts of puts that need to be expired, worthless, which of course has occurred now. And I think just the standard seasonals that you tend to see in the US market over this period. March does tend to be relatively good, but April usually is one of those best months of the year. So it's one of those ones that has strong performance since the 1950s and even before that. And you can see here, the past 10 years, April has been pretty much the best month in the market. So for bulls, they're going to be feeling a little bit better about buying these zones right now. But will it come back down? We hopefully have some answers a little bit later. So a lot of people are saying, well, what stock should I be in? Now, last week, I guess if you were in Square, you'd be pretty happy. That's Block Media. That thing did phenomenally. I mean, you're up like 50, 60, 70% off the bottoms. But stock splits also tend to do well. And luckily, in this market, we have two big stock splits. We've got Amazon and we've got Google. And Google actually lagged the rest of the market in terms of the big caps last week. But look at this, 3-month, 6-month, and 12-month outperformance of stock splits tends to be a thing. So if you believe in this bullish market right now, that's pretty important. I've just got some quick slides I thought I'd bring up here. This is the Nasdaq composite after consecutive 2.5% gains following 52-week lows. You'll notice it often tends to be pretty bullish, just something I thought would bring in. And I also want to bring in this really interesting chart that probably a lot of you have seen. We've already seen this manifest in currencies around the world, but also in the DAX in the EU. We brought up the DAX a few weeks ago as the weakest looking index. It's since recovered strongly after crashing just massively. But a lot of this was literally people fleeing Europe in terms of money. So you can see how these geopolitical events can really cause massive shocks in the political system and of course the worldwide monetary system as well. That's one of the biggest outflows ever in terms of European equities and European dollars. It was crazy. Another thing that I want to bring up is people are saying this is the rally, it's going to all-time highs, everything looks great. Look, statistics would say, yes, we do tend to get March into April into maybe even May or June rallies, but usually in midterm election years, we have weakness in the back end of the year. So I think this year is still the year of the trader and of course the year of the investor when they have that bigger term picture. So just remember that there's going to be a lot of volatility this year, and it's great to be able to follow channels like this and other channels and come up with your own ideas because there are going to be a lot of volatile events and hopefully you'll be able to take advantage of those. Let's take a look at some of the big problems leading into the market from a macro perspective. Of course, we've got the yield inversion questions. Here we have the US 2-year, 10-year. I won't dwell on this. We talk about it all the time. But basically, if this inverts, if it goes past this 0%, I've got it backwards here. What that is really meaning is sickness in the economy. And usually it's what we call the canary in the coal mine. Basically, if it goes over the inversion yield, it's led to some of the bigger recessions on record. And I think we've got to pay attention to that. Another one has been the US 5-year, 10-year. That's just recently inverted. And again, it's not a good sign for the market moving forward, longer term. It's not the US 2-year, 10-year in terms of accuracy, but it's certainly pretty strong. And I think we've just got to have these on our chart. So one of the reasons that we were starting to say, okay, maybe this bottom is in, was the bond traders. We talked about corporate bond yields. Obviously, I use a different indicator to this, a bit of a proprietary one, but this particular thing is something that some people don't watch enough. They look at government bonds, they look at those types of things. You do want to be looking at what bond traders do in the markets. And if they're coming along with stock traders, it can be a very powerful technique to be watching. If they agree, usually it's good. If they don't agree, yeah, it's time to be scared because bond traders are pretty smart guys out there, guys and girls. It's they're not like stock traders. They're not YOLOing all over the place. These are number crunching boffins. So we need to pay attention to them. It's hit the 20 moving average on the way down. And you'll notice that was where the last kind of rally fizzled out. And this was the rally that came off the 24th. So interesting that we're coming into that resistance. I think this is the first case where you might say, okay, the bulls are looking better. But maybe the bears, if they're going to push it down, this could be a point where at least they have a go at the market. So we'll keep coming through to this strategy or this concept a little bit later. Another thing is the VIX, the volatility index or the fear index. Here it is, and you'll notice it's coming right back down. Our trend line actually worked here. It pretty much predicted the end of the VIX. It went down, bounced up, found resistance, and sold off. So if the VIX comes down into that 2022 area, or even where it is now, 23-ish, is this an area where you could see volatility spike back up? I think it's very possible. Around this zone tends to be where you do see the VIX kind of spike after pullbacks. You can see here the January 24th period comes back down, spikes off that level and goes back up. So if it's going to happen, it happens soon, and this is the area. So VIX traders will be watching that. Another one we saw was PCC. We saw a lot of bullish bets getting placed on the market on that session. Basically, the amount of puts in the market declined heavily through the day trade. And you notice here 0.8. So we use this as a bit of a, let's call it backwards indicator. If there's less puts in the market, what chance does the market have of going down? It's, of course, technically higher. If there's lots of puts in the market, what tends to happen? It usually is finding bottoms. And that's something that we need to always remember when it comes to expiry points as well. Let's move over to some commodities. We'll just discuss two of the big ones. Gold, of course, first on our list here. We saw a bottoming effect kind of coming through the 1900. It bounced off that level and then it's come straight back down and closed around here. Let's have a look at it on a weekly. So on a weekly, this is how it watches. And you'll notice it looked pretty negative actually. It's got like kind of this huge bounce off here, and many people will know this as a pretty nasty candle pattern, or at least it could be a pretty nasty candle pattern. Now, if it is something like an evening star, it would be very negative if gold made a new low. And I think we need to be aware of that. Gold is in a precarious situation here in the charts. Now, I liked what we saw on the Thursday session, or was it the Wednesday session, where we had that bounce off and then we rallied through. I don't like where it closed here. And I think gold's going to be an hour by hour, minute by minute day trade. So continue to be nimble and quick on this one until we see clearer images. If you get past 1950 this week, great. We've got that lightning bolt, trough, peak, higher trough, bottom probably in, and you'll continue to see some rally at least up to the 1980. But if you don't, be careful here. Yeah, I think that's probably the worthwhile thing to do. Let's move over to energy. So oil has been the discussion point. Everybody said $180, $200, $300 oil a barrel. It didn't happen. It actually crashed. And this is what I call a parabolic market into a crash. I tend not to believe that this market will get much further than these levels in here. And what I'd be looking for is, if you see rallies, it could be stuck for a while here. So I'm not saying that oil is going to $50 a barrel or anything, but I could see it rally and then slowly decline and kind of stay in a trading range for a bit. It seems to have found a fairly decent level. And with the buys up here, while it could get aggressive, it's probably going to have some problems in here from sellers. I think people will dump oil being scared of the current volatility. That tends to be something that does occur. Let's move over to some stocks. Tesla. Yeah, well done, everyone. You guys are beasts. I mean, Tesla comes back very strong, doesn't it? It's amazing how well this stock really does sometimes. We've got trough, peak, higher trough, technically a higher peak here. And the last big stop for the bulls is 945. If they manage to get it through 945, 950, then we move towards 1,000. And of course, possibly even way higher. I saw a lot of people getting incredibly scared on Tesla a few weeks ago, and people were doing all sorts of things that I never thought some of these people would do. Now, it's okay. I mean, I totally understand. It's a very volatile market here. But one thing that really happened was some people were selling their positions. And of course, as soon as you see that, especially people that are real believers in Tesla, it creates that kind of, maybe we're in a capitulation trade. And that actually was happening a lot around 700. So we saw that happen a lot on Twitter around the 700 level. We've now broken through some of our key things. We've broken through the 20 moving average. The daily 20 has held Tesla down so many times. We've broken through the downward trend line at the same time, both positives. What are Tesla traders going to be looking at this week? Well, the potential of a pullback into a long position. So I think this is something that definitely is going to be on the watch list here for Tesla traders. A pullback maybe to the 850s, or even a rally to the 950, and then a pullback back down to the zone. I find it hard to believe this rally will just go vertical. I think there will be some pullback. There tends to be one in these kind of points. Let's move over to Google. I want to discuss Google here because I think it's probably the worst of the fangs at this moment in terms of recovery. Google has a stock split coming up on it. People have forgotten about that. They had a great earnings. They probably will continue. You're watching this on YouTube. Of course, think of the ads. I've got whatever it is, YouTube, this premium service, I still can't remember what it's called, but I've got that. And I really like it. And I think a lot of people have moved over to that type of thing as maybe their television. You're probably watching this and think about how much time you spend on it. So will they continue to do well? Probably. Are they a good AI company? Yes. Is this some kind of triple bottom? Very possible, yeah. And if we breach through this, then we're looking potentially at that $3,000 level. If you think about that as a percentage, it's about 10% just to there. Forgetting the split, it could be even more. So we've got to remember that things like Google could be doing quite well in this environment. You've also got some kind of divergence off the bottoms here. And I think if it breaches through, it's an interesting one to be watching in the market week ahead. So definitely Google on my watch list at this point. Another one that's done really well, and this again starts to point into this probably is some form of strange recovery in the market for now, is ARK. Yeah, you heard me say it. ARK has broken through the 20 moving average. That has kept ARK down and actually kept us out of trouble for a very long time. It's gone back to where it was in over here, the January period, the January lows. It's been sold off now aggressively for a long time. It's closed for the first time above that zone. Now, could it find weakness here? Of course it could, and that may be actually what's occurring. But this is the first recovery we've seen that's kind of statistically more likely for ARK. And I think that's something that we should be bringing into our charts and should be discussing on the channel. There's, of course, a huge engulf backwards, things are looking better on this particular chart. Some other ones that have been looking better, that have been a huge sell-off, of course, we've got the China Technology ETF, the QQQ, and that bounced off thanks to government saying, you know what, we're going to stop the crackdown. Not much light on what that means, but you'll notice volume has really ticked up on this. It's still quite cheap. So you might be thinking, oh, I could have got it for $40 a week ago. Yeah, you didn't know that was going to happen. If you did, you probably had insider information. But $50, it's come back up. It did come down a little bit, so if you bought that kind of dip after the initial news, it's pretty strong. And this could be the base. When the Chinese government comes out, or any government comes out and starts to support the market, it's effectively insider. It's kind of like manipulation to the max, yeah? And it usually forms some form of base in the market. So I think this is an interesting one that people are starting to pay attention to again. We mentioned the DAX before. The DAX has been very strong off the bottom, but recently it's just kind of hovering around. Still a lot of money has come out of the European markets. It's up 17% off the base. It just shows you why sometimes trading out the markets can really pay off. And we've got that kind of problem around the 15,000 level. So the DAX is doing really well, but at this stage, we'll just keep watching that. I'm not excited either way for the DAX. I think the downside risks are still there in that market. IWM, the small cap Russell 2000, it hasn't broken past 210, showing an across the board recovery. Obviously, this is our huge kind of triple bottom that we're looking for here. If we breach this level, we've been talking about that being a true bull recovery. Hasn't done it yet, but it's certainly looking much better. And volume is still holding okay. It's not as good as it used to be. Dow, don't really need to mention much about this. It's not giving us that clear a signal. So we'll come back to the Dow. We talked about it being a potential Wyckoff distribution. If it is, it really hasn't done the proper break below, and it certainly hasn't done much at all in terms of showing us weakness in the market. But let's move on to some of the more technical markets. Let's talk about the Nasdaq. I really like the Nasdaq from the perspective of it broke through a downward trend line. That's significant. I mean, we talked about this. It's very significant. We've got that triple kind of base here. We've obviously got the double bottom. And if the market's going to come back down this week, where do we think is the most likely area for it to come back down to if it's going to find buying pressure? Somewhere around that 13.8. This is going to be the zone where you think bulls and bears fight it out quite a lot, around the 13,800 level. It rallied incredibly hard. It ended right around that 14.4 zone. That's pretty much the previous resistance, putting in a potential another huge double bottom. I'm not sure if that's enough to crack the high, so as in like to say, yes, the total recovery is done, but certainly stage 1 of recovery is done, and this will be stage 2. And once stage 2 occurs, you're starting to say, okay, this is mostly going to go into the bulls' favor. March, April being strong, those types of things really starting to occur. If you look at the weekly, it's also done quite well. But don't lose sight of the fact that we have a 20 moving average weekly, historically amazing, dynamic support, and of course, dynamic resistance, and a 50. Is this area going to be tough? You would think it may be. And I want to go over to the SPX to discuss this. So here's the S&P 500. Where is it? It closed right on the 20 moving average weekly. This is the exponential moving average. It closed right on maximum pain. It certainly did everything it needed to do. And a lot of people are going to be saying, well, this is the rally it's going to start. I totally understand why. Again, downward trend coming through. Even if you look at this on a logarithmic scale, you'll notice that downward trend. Can be good to use logarithmic. We saw the first signs of this here. This was very strong. We obviously saw the bond traders agreeing with that, and they've rallied through past this resistance. So if sell-offs occur, do we expect buyers to come back in? I think the sentiment has changed here a bit, and I think you may see buyers. Now you might say, but I don't think this makes any sense whatsoever. The world is terrible. Interest rates are crazy. Inflation's out of control. Yeah, you've got to kind of trade with the market and what it's doing. Unfortunately, that is how it is. Now, if you use things like yield inversion and other canary indicators, you can sometimes figure out when the market is sick and therefore not get into it. And then at that point, you might want to trade instead of invest. But right now, this is just what we're seeing. We're seeing it breach through. It's showing signs of strength. Obviously, we've got that 4,600 being the next huge level. And if it goes down like this and then rallies through, where's the take profit target that most people are going to have set? Around 4,600. It's going to be very, very key. If you look at options this week as well, you'll notice there's still a lot of puts in the market for expiry this week. that's for the SPY. This is just where they are. They're not anywhere near as huge as others, so I'm not going to pay too much attention to these, but certainly worthwhile having as a little bit of a tool to say, okay, maybe the market will continue to hold up here for the week. It's going to be a very important one. You've seen some key levels that we're watching right now. Let's move over to the crypto market. So Bitcoin doing okay, 42,000 again, after being down as low as 37 and testing these lows. Now you'll notice that the weeklies have been incredibly rejecting here. So we don't have the close on the weekly yet, but if it does come down and get underneath 37, that's where the bears get full control of this market. At this stage, it's looking more positive, but it's not really the Bitcoin chart. We've talked this one to death. 45,000, once it closes above there, big deal. 45, 46, get out of this zone. The recovery is in. At that point, what you're doing is you're putting in multiple higher lows, you're breaking through and effectively creating some form of ascending kind of triangle. It hasn't happened yet, so we're stuck in the middle of nowhere. Ethereum, however, has broken through the downward trend. So it's actually said, you know what? I'm feeling a bit more positive. The indicator on Ethereum hasn't been as good, but we are seeing money going back into some alts, the DOTs, the IOTX, the Matic, all of these types of things are doing a little bit better, Solana. But overall, yeah, Ethereum does look better on the chart. We've still got resistance issues. And I think that the crypto market is still confused. It's trying to figure out what it wants to do next. If you haven't already been following us, please follow us over on Twitter. We post different information there. Of course, at FX Evolution is the tag. And thank you so much for supporting us there. And I want to just talk about this week for the week ahead. Yeah, we've got the Papa Jerome coming out. He just doesn't go away. I don't know why he doesn't go away. I mean, he only says one thing. We're going to use all the tools and everything is transitory, okay? Inflation is transitory. This is transitory. And of course, now he's saying inflation is here to stay, but doesn't really say what that means. So it's really tough to read per Jerome. But here we have 10 a.m. US dollar. Obviously, we're talking about the US market. Fed Chair Powell speaks. We scroll down past the Monday. We get into the Wednesday. He's out there again, spruiking how great the economy is. And then we've obviously got some extra information coming out here. But it's mostly Jerome speeches. The market should be left to do its own technical thing. I'm thinking maybe a pullback here early, maybe the Monday, Tuesday after that massive options expiration, and then we'll find out some hopefully true direction. So we'll be updating you throughout the week. We're back to our normal show. As always, if you enjoy our videos, please subscribe, smash that like button, and we'll see you in the next one. Bye for now.